Hi, here I am Mahmood Durani. This is my channel Accounting Lectures. Today is lecture number 29. I hope you all will be best in life. Today topic is most important topic. This is my channel Accounting Lectures. Here I give the lectures of financial accounting, management accounting. So rules today topic is rules of debit and credit. Debit credit rules. This is very important topic, and this is for all students, CPA, BCom, C enter, and any professional accountant, all for all accountants. I i made my this lecture very well, so I hope you will get more information from my lecture. So let's start. Definition for debit and credit. Left hand side is called debit, right hand side is called credit. So how left hand side and which thing left hand side? Let me explain. This is a ledger account. Debit particulars folio debit credit. Date particular folio debit credit. Ledger account left hand side is this is called debit. Ledger account right hand side is this is called credit. Debit we denote from dr, credit we denote from cr. Both side or is coming, you will think d mean debit, c mean credit, but or mean what? Both sides. This or mean what? Or. I hide by pen because I wrote here. So this D mean debit, C mean credit. What is mean by or both sides? This or mean record. D debit record, D or debit record, C or credit record. This is most valuable information. 5 elements to understand the debit and credit rules. We must know about the 5 elements of financial statements. Assets, liability, second, third, capital, 4, revenue, 5, expenses. Asset. Now I will show you practically all rules for assets, debit credit rule for asset, liability, capital, revenue and expenses. Asset. Asset will be debit when asset increase. How asset increase? When the business buy, and when and asset will be debit when asset come in. Asset will be credit when it decrease. When asset decrease. How asset decrease? When the fixed asset disposed of, so it is decreasing. When we sell the current asset, inventory, it will decrease. Asset will be credit when asset going out from the company. Liability. Liability will be debit when liability decrease. How liability decrease? When we pay our account payable, our liability. Liability will be credit when liability increase. How liability increase? When the company buy on credit. Capital. Capital will be credit because capital have credit nature. After some time, I will explain all these by daily transactions and by entry through ledgers. Revenue have credit nature, so we will credit our revenue in our company, in our business, and expense will always be debit because expense have debit nature. Asset, I told, will be debit when increase, when we buy, when the asset come in, and will credit when decrease, when we disposed of and sell, and we do going and when the asset going out. Let's by example purchase asset machinery by cash. Machinery is asset when we purchase, so machinery is coming to the business. I write here come in, so machinery will be debit and asset is increasing. Cash is also current asset. Cash is going from our business because we are paying for buying the machinery, so the cash will be credit. Debit credit $10,000, $10,000. Liability will be debit when liability decrease and when we purchase amount paid, when we paid the purchase amount. Liability will be credit when the liability increase, when we purchase on credit. Example, purchase raw material on credit $50,000. Raw material is our asset, current asset. Current asset is coming to the business. Asset will increase. Asset is increasing, coming to the business. So, raw material 50,000 debit. Account payable we purchase on credit. So, our liability is increasing. Account payable is increasing. Account payable is creditors. Creditors mean suppliers. So, we will increase the account payable creditors. When the liability increase, creditors and account payable is our liability. It is increasing. It is increasing. So it will be credit $50,000. $50,000, both sides equal. How liability will be decreased? This is second example. This is example for increasing. This is example for decreasing. Paid $50,000 against purchase of raw material. Here we purchase on credit. Here we are paying this credit. So account payable, creditors, our liability is now decreasing because we are paying our $50,000 debt liability. So I told when liability decrease, it will be debit and cash. We are paying the cash. Cash is our current assets. Cash is going from our business. Cash is decreasing. Therefore, cash will be credit. Account payable debit, cash credit. Capital. Capital, I told it will be credit. It have a credit nature. So, the owner invest and start business by $50,000. So owner bring the capital to the business. Cash come into the business. Cash is current asset. Cash is increasing. So cash will be debit $50,000. Capital, I told capital will be credit always. So capital is credit nature $50,000. Cash debit, capital credit. Revenue. Revenue will be credit nature. So sale, this is the example for revenue. Sale goods on $10,000. When we sell the goods on $10,000, so our sale is increasing and our revenue is producing. So cash came against the sale. Cash debit. Cash is current asset. Current asset is increasing. So cash debit and revenue. I told revenue will be credit. always. So revenue and sale credit $10,000. Expense will be debit always. Expense have debit nature, so expense will be debit always. So let's see the example for expense. Paid rent $5,000. Rent is expense, so I told expense will always be debit, so rent is debit. Cash. Cash is our current asset. Cash is going from the business. Cash is decreasing. Current asset is decreasing. So cash will be credit $5,000. Capital always credit nature, revenue credit nature always, and expense always debit nature. Kindly subscribe my channel to get all my lectures. I gave the lectures on accounting standards from A to Z, many accounting topics. So kindly subscribe my channel to get all my lectures. Thank you so much.